And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live from Channels HQ right here in Lagos. Hope your morning is going great. Let's kick off with the markets now. Starting with grain markets, we see Chicago would gain more ground today, climbing to its highest in a week. The most active wheat contract on the Chicago Board of Trade, CBOT WV1, rose by 0.1% to $6.61 for 3/4 of a bushel. An early trade after hitting its highest since May 8th at $6.64 for 1/4 of a bushel. Corn CB1 that fell 0.4% to $5.90 for 1/4 of a bushel, and soybeans SV1 gave up 0.2% to $13.98 for half a bushel. Wheat prices have been rising on fears of tightening supplies after the USDA's first official forecast of U.S. 2023-24 all wheat production at 1.659 billion bushels. That fell below most analysts' expectations. And to the oil markets now, we see oil prices rose today for the second day. Brent crude futures that climbed 30 cents, about 0.4% to $75.53 for a barrel, while U.S. West Texas Intermediate crude, that's at $71.38 per barrel, up 27 cents, about 0.38% jump. Both benchmarks rose more than 1% on Monday, reversing a 3-session losing streak. We'll drill down on drivers later on the show. And back at a Court of Appeal in Abuja suspended the enforcement of interim court orders against Seplat Energy PLC and its executives. The interim orders granted on May the 11th by the Federal High Court been made after a petition was filed by minority shareholders restraining the chairman, the chief executive officer, the chief operating officer, and company secretary from functioning as officers of the group. The petition was the third in a series of duplicative petitions filed by the same group of shareholders between March and April. Meanwhile, the appeal court adjourned the matter to May the 30th for hearing of the motion on notice. And in line with economists' forecast, Nigeria's headline inflation rate climbed further to 22.22% in April, and that's the highest level in 18 years. According to the latest report released by the National Bureau of Statistics, a figure is the 4th consecutive month rise, about 0.18% higher than the 22.04% inflation rate recorded in March. We'll also drill down on what drove that and what to expect for the next MPC meeting. And here the central bank governor, Mr. Gordon Emefiele, is expressing concerns over recent challenges encountered by Nigerians in using the unstructured supplementary service data platform, also known as the USSD code. The code allows users without smartphones or internet connections to access mobile banking. The governor was speaking at the launch of an e-learning platform by the bank as part of its financial literacy effort in Abuja, explains that efforts have been put in place to address it.
You guys must have heard about this story from Friday till today about USSD, which we are making deliberate efforts. We've been at this, I use the word tug of war between the banks and the mobile network operators about how to resolve the payment of USSD. But we've been at this for almost about 2-3 years. But I'm very certain that we are going to get to the end of it, because if we do not resolve the problem, the people who will suffer, like we say, when 2 elephants fight, it is the grass that suffer. Those that will suffer when these kind of disagreements go on will be those who are the users of banking services. The USSD technology was brought into place primarily because we felt that it would be a deep enabler of our vulnerable people in the nooks and crannies in Nigeria, those who do not have, who we need to encourage to really get into the financial inclusion programs of the Central Bank of Nigeria.
And to our first conversation now. Well, on this USSD issue, telecom operators under the platform of the Association of Licensed Telecommunications Operators of Nigeria, ALTEN, recently announced they were prepared to disconnect all bank customers currently using the unstructured supplementary service data, the USSD, over debt owed them by banks, which has over the years risen to 120 billion naira. Well, joining me now is Engineer Gbenga Adebayo, Chairman, Association of Licensed Telecommunications Operators of Nigeria, ALTEN. Joining me via Zoom. Great to have you on the show. Good morning.
Good morning, and thank you for having me.
Yeah, this almost seems like a deja vu. About 4 months ago, we spoke about this last year, and the figure was about 80 billion naira then. How come this isn't settled yet, and what are the banks saying?
We've been at it, as you have heard the CBN governor said, that we've been at it for upward of 2 years now. What we find difficult to understand is why the banks are not remitting these sums to the operators. When we started 2.5 years ago, thereabout, the debt was at 42 billion naira. Today, it has risen to 120 billion naira. The only reason why we have not withdrawn the service before now is in public interest, as directed by Honorable Minister of Communications and Digital Economy. We thought that the matters would be resolved, but what it looks like is that the banks have taken advantage of not withdrawing the services to continue to pile up the debt, and we are where we are. We really cannot understand why the banks are not paying.
And before now, you know, the NCC and Minister of Communications and Digital Economy, they did weigh in, you know, to this matter to try and, you know, broker a deal between the telcos and the banks. But now you're getting the nod from the NCC to go ahead and withdraw USSD services. How come the NCC is approving it at this time?
Yeah, because we've exhausted all avenues for dialogue, and the NCC had stepped in. The CBN also at some point had stepped into this conversation, but it will appear as if no effort made has been able to move the dial forward. And the last result is for us to withdraw the services, at least to protect the industry so that we don't continue to have the debt profile grow beyond what it is. So they are granting this concession, this concurrence that we should proceed to withdraw now, just to protect the industry and to minimize the scope of the debt, which, as we have seen from the numbers, has risen significantly high. Again, we do not understand why the banks are not paying this money. We don't understand it.
Why can't, you know, your association just maybe take the banks to court instead of withdrawing the USSD service?
Well, there are many sides to it. Now, with the concurrence of our regulator that we can proceed to disconnect, we are now going to follow the terms of the agreement, either with the aggregators for the banks or the banks themselves, and we'll enforce to the later in terms of those commercial agreements. Because really and truly, but for the intervention that we had at the level of the Honorable Minister, this was basically a commercial agreement where parties have terms of understanding, terms of transactions, and where either of the parties pays, there are mechanisms for resolving them. But because the minister stepped in for public good and in national interest, and like the CBN government said, for reasons of financial inclusion, we have had to delay this process, not looking at the terms of the agreement, but looking at political resolution to the matter. And it got us to where we are. So really and truly at this point, we have no choice than to enforce the terms of those agreements. And we are pleased that our regulator has granted the concurrence for us to proceed with the disconnection according to the terms of the agreement. And so we are going to do it. If parties have to go to court eventually or arbitration, so will it be. But in order for the debt not to continue to grow, we have to protect ourselves, we have to protect the industry, we have to provide the subscribers who have so been charged for this service and not to have the debt profile grow beyond what it is.
But as we speak now, the USSD service is still, you can still use it at this time.
Yes, you can, but our discussions are ongoing. We have informed the debtor banks to honor their obligations. And according to terms of the commercial agreement, we are going to go ahead to withdraw the services if they do not pay within the time frame provided by the agreements.
And when would that be exactly? When can users expect to be disconnected, you know, from this service if there's no consensus?
If the banks fail to pay, if the banks fail to remit the sum due to us, this can happen anytime from now.
So have the banks, you know, started making some kind of, you know, payments at this time at all? Have you seen any leeway?
But what we have done is to inform them, as provided by the terms of the agreement, And we are hoping that parties will be honorable and reasonable enough to follow those terms. And we hope that we will not come to a point where we have total blackout of USSD service. I've also seen in the last day some discussions and narration in the media that the USSD is supposed to be services that will be paid according to end user billing. And again, we got to where we were because at inception, we have had what we call corporate billing, meaning that parties exchange bills at the end of the month and the banks pay. At some point, the banks did say to us that these are supposed to be telecom subscribers and we should go ahead and bill them. But our concern at the time is that if we bill the subscribers from the airtime or from data service, at the other end, the banks will bill and deduct from their account. It amounts to double billing. And that was why the minister stepped in and said, no, let the status quo remain while parties discuss. So the point here is that we have two issues on the table. One is the issue of the outstanding debt. The second is in the method of billing, which we are reading yesterday. The bank is saying it is due to technical issues. There are no such technical problems at all. It's a matter of understanding on what kind of billing methodology to adopt. So we're saying that whatever billing method will be adopted going forward, the debt has to be cleared and settled. And we can look at the mechanism for going forward, except they are saying that let's change the billing mechanism and charge the subscribers retroactively, which again will not be fair on the subscribers. And these are issues that has to be discussed on roundtable for public good and the interest of the subscribers. We provide carrier services. In essence, our role is to transport the subscribers from their devices to the bank. We do not have control over what happens on the platform of the banks. So imagine that you hire a Uber to go to the bank. You book a Taxify or a Uber or any form of commercial taxi to go to the bank. They bring you to the door of the bank, you pay them for the service. What happens when they get into the bank is no longer in the hands of the transporter that took you to the bank. So ours is just carrier service that deliver users to the bank. So what happens on the banking platform, whether they go there to transfer money, they go there to do credit reward withdrawal, they go there to eat or to sleep or to dance, we don't know. So, and we think that the services that we provide, which is to deliver people to the doors of the platform of the bank, should be paid for. So the arguments of how we are billing, how we are not billing, that doesn't arise in this case. We only provide carrier services and we do not have any control over what happens at the banking platform. So the argument of saying that they do not understand that we are billing, the billing is not transparent enough, because of course we do not have access to what happens at the end. So what we know is that services, subscribers that we deliver to the banking platform, we have a record of them. We have a record of successful transactions to that effect. Whatever happened on the end of on the banking platform is not feasible to us, and we have no control by it. So we believe and we insist that this sum due to us has to be paid by the banks.
Okay, so help us break it down here, because the CBN did weigh in on this matter. I said that the dispute is more of dispute concerns on technical issues, as you mentioned, regarding the definition of a successful transaction from a bank and a telco perspective. Can you break it down, for us, at this time? How do you know when a transaction is actually consummated?
It's easy for us to say. And again, like I explained earlier, we provide carrier service. We only provide transport service. Imagine I'm coming to your studio this morning for this interview. If I hire a transport service, I join the taxi from my home to your studio. When I get to your studio, I've been delivered to your facility by the transporter. I have to pay the transport man for this service. If I now get into your building and you say to me the interview is cancelled, or for whatever reason you don't have electricity in your facility and we cannot hold the interview, I can say to the transporter that I didn't achieve my mission there, so I won't pay you for the service. It's as simple as that. So we deliver subscribers from their devices to the bank, to the banking platform. What happens on the bank, but once we deliver them, we have a record of successful transactions, successful delivery. Once that happens, our job is done. We should get paid for this service. What now happens when they get to the infrastructure of the bank at the other end is not feasible to us and is not in our control. And we do not think that whatever reason of they are going to the banking facility, we should be accountable for what happened at that time. We do not think so.
So at the end of the day, you charge whether or not the service is consummated?
So long as we deliver subscribers to the platform of the banks, yes, we charge. So long as we have record of successful transaction from origination to delivery, yes, we consider that as successful because mission accomplished, yes, we do charge. Now, what happens at the end of the infrastructure of the banks, we have no visibility of it because we don't see what happens there. So we can't be held accountable for issues of complexity or difficulty in transactions when they get to the platform of the banks.
So definitely a lot of people rely, on this USSD service, in the rural areas, even, right here in urban areas. Aren't you concerned about how this would disrupt, their transactions if you actually withdraw this service?
We are very concerned, and that accounts in part for why the debt has lingered for so long. But it has come to a point where we have to protect our own industry. Debt of 120 billion naira outstanding today is a lot of money. That's enough to sink an entire sector. And that's why we need to tread very carefully. You can't owe the bank a naira. You can't owe them a million naira. You can't owe them for upward of so many years that we're talking about. You know what the banks will do to you. So we're saying that this debt has lingered for so long. We haven't taken this step for now till now because of public good and on account of the intervention of our minister and also our regulators. But it will appear that all those efforts have to no avail, and we just have to do something at this stage to minimize the scope of the debt to ensure that parties honor the obligation, and we can look at the way forward. So we are as well as concerned. But in the same way, we're also concerned about the survival of our industry.
And is there any chance that you don't get this, funds back? And what happens next? And now that we see the CBN is weighing in on the matter, is there any light at the end of the tunnel?
That provides some ray of hope. It's quite comforting to hear the CBN governor saying what he has said on television. So we hope that with this intervention, we'll be able to resolve the matter without having to recourse to total withdrawal of services. Yeah, so we are hopeful, and we hope that parties will now honor the obligation and we can move on.
And it's quite interesting. Tomorrow is World Telecommunications Day, and we're having these issues right here in Nigeria. How are you guys looking to celebrate that day tomorrow?
Well, we think we've done well as an industry. You have seen the impact of telecom on the national economy. Again, you have also seen the consideration and the human face of the sector. Again, how can one industry carry debt profile of 142 billion over 2 years and now rising to 120 billion? So we've done a lot for the society and for the economy. We believe that this should be complemented by those to whom we provide services honoring the obligation to us. We celebrate the subscribers. We thank the subscribers because there are reasons why we are here. And we're actually on this issue and on this road of dispute with the banks in the best interest of subscribers, because there is a question to ask. These services have been paid by the subscribers. And what happened to the part of that belongs to the operators? This is the question to ask, and nobody is asking this question. Because in the intervening years, the USSD service is not free to anyone. I know that till this morning, even when you do USSD transactions, you still get some debit on your account. So the big question to ask is, where is this money that is deducted from subscriber accounts? So there's also a moral burden on the shoulders of the banks, and they must account for this to everyone.
All right, I guess we'll also do our best to also hear from the banks too. Thank you so much, Engineer Gbenga Adebayo, Chairman, Association of Licensed Telecom Operators of Nigeria. Thank you for coming on the show today. And I hope this is resolved.
Thank you for having me.
As soon as possible.
Thank you, we hope so. We hope, right. We really hope.
Okay, thank you. All right, so we'll take a break now. When we come back, Commodities Market Update is next. Do stay with us. Welcome back for Commodities Market Update. Now we have Bolanle Agbaje, Senior Analyst at FDC, joining us right here in the studio. Great to have you. Good morning. Yeah, so the number now is 2222. Quite an interesting number, but no surprises.
Yes, no surprises. Yeah. Obviously, it's a cause for concern because as much as it's not as is what we expected, but inflation is still rising, prices are still sticky, and it seems like the hikes in interest rates they've done so far, policy rates they've done so far, has had little impact. So we can say
this inflation has defied interest rate hikes.
Yes, it seems like it. And one thing I've heard is the IMF actually mentioned that usually policy rates, after about 3 to 4 years, the impact on inflation, if you're still focusing on that particular rate of inflation that keeps going up, it definitely now has minimal impact on it. So it would be nice for the central bank to look for other supportive measures to help to bring down this particular inflation rate. It's not necessarily great, and what we had seen in the past month was the fact that food prices was the major contributor to this, although you still have those structural issues that keep lingering with transportation and fuel prices, all of that still having its impact on prices generally in the economy.
We're seeing other climes, inflation is either slowing or having some kind of deceleration,
still very
high.
Yes.
But at least we're seeing some kind of
yes, so obviously, when it comes to our economy, comparing it to, what's happening in the West, we're still very far behind in terms of our structures. And so it would definitely be worse for us in this country, just because it's not just about, the pandemic or the war affecting, prices, and which obviously led to, the wage spiral effect in other countries. Right here, unemployment levels are at record highs. You're having some deficiencies in major industries that have contributed to or made the prices linger and still going up. And one important thing as well is the expectations. Right now, everyone in the economy expects that prices would remain high, just because you're seeing major costs that are contributing to major aspects of businesses remaining high as well. So those expectations also feed into the final prices that we see in the market.
All right, break down the data for us. That we see core inflation is highest level since May 2004, higher than most estimates. Looking at the data overall, are there any positives?
Core inflation increased from 19.86% to 20.14. Food inflation also increased from 24.45 to 24.61%. So from there, it's clear that food inflation is the major driver. But one important aspect to look at is the month-on-month. So the month-on-month probably tells you, whether the hike in price was significant or not. So month-on-month actually increased to about 1.91%, which is a cause for concern. But at the end of the day, when we look at what the activities in the month of April, we had seen two celebrations that don't necessarily happen within the same month happening. So you've had that extra, buzz with prices. And so going forward, it means that right now, obviously, we're entering the planting season. So we do expect that prices would increase as normal in previous years. But we do hope that the rate at which it increases, so following the month-on-month increases, shouldn't be as much as what we had seen so far.
Because when I go into the stores, it feels higher than 22.22%. And I know you go into the stores yourself, you go to the market.
Well, we
prices
do.
Feel really high.
As economists, we definitely have to focus on the data that we're seeing at the moment, because there are ways that the inflation numbers are being calculated, definitely you would feel that, because it's directly what's going into your mouth. So exactly. And you're feeling it based on your dependent on the salary you earn every month. So it will bite hard, definitely. But we've all said this year is going to be a tough year for Nigerians. We've seen so many unexpected.
Proving to be tough.
And it's most likely going to remain tough, most likely till the end of the year. What we do hope is that as this new administration comes in 2 weeks, they get right into business and focus on targeting those areas that are making the economy as weak as we see it at this point.
And looking at all of this data, how much can the average consumer still take at this time, and the average worker out there? Because at the end of the day, your salary is not doing very much.
Yeah, so with food prices, we see the up and down movements. So majorly in Q2, you see the planting season where food prices or food supply actually reduces. But going into Q3, when the harvest season begins again, you see those changes. So it's not to say that this particular trend with very, very high food prices is going to. And I'm focusing more on food prices because that's the basic necessity of every human being.
That takes a chunk of every.
It takes a chunk of
earnings.
Of earnings. And so by the time you enter Q3, we do expect that it will be tapered down slightly. And Well, it would be nice to also watch and see what the administration does as well, because it would be nice for them to get into it and kick off things. Although we do have the subsidy issue lingering as well. So let's see. It's just a wait and see game. Yes.
And the Dangote Refinery, commissioning, that's also next week.
Yes.
I wonder how that's even going to play into the inflation story when they start production.
So let's give it time and see what the prices would come out to be, and see how how the market actually responds to this as well. One thing we do know is that the cost of production generally, not just Dangote Refinery, generally for any industry, is very high at the moment, and that will be fed into the prices of whatever their final product is. So it would just be nice to see what Dangote does in terms of managing the costs and creating a situation where the final product that we get is better than what we're importing at the moment.
That'll be quite great for sure. But now I want you to look into your crystal ball. It's May. What are you expecting? We've had 22.22 for April. What are you seeing in May?
So obviously, like I mentioned, in May we're still in the heart of the planting season. So it's most likely that inflation numbers will definitely inch up. We don't know. It might not be as much as what we've seen now, but it will definitely be going up, because that's just what the fundamentals are saying.
And the last MPC meeting for this administration,
yes, next week.
That's next week. What are you expecting?
We definitely do expect a hike, another hike. Currently, policy rate is about 18%. So even if we're trying to be conservative and there's no hike, definitely maintaining status quo. So it's between one of the two, but we're leaning more towards the hike, because the last time inflation numbers were around this number was in 2005, and at that point, policy rate was 13%, and that was just because we had the debt forgiveness and the completeness at that time. But right now, things are very different. So I'm sure the central bank, the committee wouldn't sit back and watch, inflation go out of the ranges that they had, predicted. And also the fact that, in other countries in the West, inflation numbers are actually coming down now, and the impact of the hikes in interest rates is feeding into the market. But we're yet to see that within Nigeria. So as much as the hike is expected, it would be nice to see why those channels are not feeding into the domestic economy. And
it's quite interesting, in the US, we've seen the impact of the hikes, not just on inflation,
where they even ignored, the banking crisis as well, because you can see the priority that they have when it comes to inflation numbers.
And it's quite interesting. What can we say for sure the interest rate hikes right here in Nigeria is really impacting?
Well, the banks, for one, would feel the impact immediately. But I think there's probably a disconnect somewhere where the interest rates, it's not necessarily translating into or feeding into the inflation numbers. Because ordinarily, when you have those hikes in interest rate savings, you should have more savings within the banks. But that's not the case at the moment. Nobody is saving. I'll be surprised to see, most Nigerians, in fact, the educated Nigerians are more or less saving abroad. You don't have, those saving rates within, and I guess it's because the saving rates are not as attractive as they're supposed to be. So there's quite a disconnect there. And so I'm sure those are one of the reasons why you're not seeing that translation. But the central bank probably knows, they know where the faults are, and I'm sure they're working as hard to make sure that they solve that problem as soon as possible.
With the cash crunch in the first quarter of 2023, it'd be interesting to see how deposits are growing at this time.
Yes.
Because obviously Nigerians will have quite a... But let's look at oil markets now. We see prices are up today.
Yes.
We've had the same trend. It's up today, it's down tomorrow. Same issue we're seeing in that space at the time.
Yeah, so right now, the U.S. mentioned that they're trying to increase their strategic reserve by about 3 million barrels. So that already signaled a supply concern in the market. So that's why we're seeing that uptick at the moment. But going forward, the supply issue will definitely follow, because towards the middle Q3, Q4, you see a lot of piling up of some of those resources. And when that happens, that translates into higher prices as well. And also the fact that, we're seeing a depreciation of the dollar, that also translated into higher prices for oil. So it's still the normal fundamentals that are driving prices up and down, but the supply concerns still weigh in on prices. And we do expect that prices will be ranging from $75 to about $80 per barrel
going forward.
Yes.
And we don't have a 50 range.
No, I think that's been
or
extremely
lower
pessimistic.
60. No lower 60.
Except something significant happens, maybe to do with the big producers, Russia, Saudi Arabia. So that's what can really drive prices lower. But at this point, I don't see that happening in the near term.
All right. How are the domestic markets looking, with this inflation data of 22.22?
Yeah, so the domestic market is inching upwards as we're entering the planting season. In the month of April, we had actually seen the price of tomatoes go up as high as 70,000 naira per bag. Right now, it's currently at about 40,000. So prices are slightly going up, and we do expect them to go slightly higher within the next few I think the next 2 to 3 months while we have the planting season, majorly tubers as well, and that was cited in the NBS report. So that's the range for prices that we're seeing at the moment.
It'll be interesting to see price stability again sometime, because it's the conversation from 2022 into 2023, rising prices,
like I mentioned, price stickiness is a major issue here. No one really expects that prices will go down anytime soon. So that expectation is really driving prices
quite incredible.
Higher.
Quite incredible. Incredible times. Thank you so much.
Thank you.
Bolanle Agbaje, Senior Analyst, Financial Derivatives Company. Thank you.
Thank you for having me.
All right, so we'll take a moment now. Business Morning returns in a moment. Welcome back. Time for the markets now. We have Anita Edit with the details. We got that positive close yesterday, though marginal. And
good morning, Ladi.
New trading day. Morning.
Yeah. Well, I would say I was a little bit surprised, because I was expecting that markets would take the side of sell pressure, because, of course, at some point we had the gains. Then the inflation data, which came shortly before the markets closed, I was expecting that maybe that negative report from the National Bureau of Statistics saying that Nigeria's inflation has crossed to another fresh 18-year high. So maybe that investors will be
definitely looking out for that. Yeah.
But we're going to look at the fixed income market first. And talking about the fixed income market, we saw that the proceedings, yesterday we had the federal government's bond auction for May, and then we saw that there was not much of enthusiasm for that market. Let's take a look at the board there. For the bonds market, it was quiet, and that's because whenever there is that bond auction, investors there are always quiet. We also saw that the bond auction there, as you can see on the board, the 14th of March paper, 2024 paper, had just about 3 deals worth about 643 million naira. That's the highest there, and which was a major contributor to what you saw as total value, 943 million naira there. So let's move over to the Treasury bills market. It's a similar picture there. We saw the Treasury secondary bills market. It was muted. Average yield there wasn't changed at 6.7%. What you see here, we saw the 14th of March 2024 paper having the highest number of deals there, just about 21.42 billion naira, and that's the highest contributor to 38.57 billion naira total value there. Let's move over to the open markets operations. It was also average yield there wasn't changed, and then we saw just about 4 deals only on the 19th of March paper 2024, and that's the total for that market. Over to the central bank special bills, we also saw that it had a little bit of activity there. So that's it for that market. Now let's talk about the equities market. We saw the equities market taking about 9.0 billion naira gain, and that translates to about 0.03% increase in basis points. That's about 16.67% basis points. So that's it for that market. And the value has crossed, still within the 28.4 trillion naira level. That's it for that market. Let's move over to the sectoral part of that market. We saw the banking sector taking a hit, no thanks to profit taking on the shares of GTCO, on the shares of FPN Holdings, as well as some other big banking names there. which countered the gains from the rest. Now let's talk about the equities market in full, and to give us more details about that, let's talk to Richard Akimoladu, who is a stockbroker at CSL Stockbrokers Limited. Thank you for joining us, Richard.
Good morning, Anita. Thanks for having me on your show today.
Okay. Now, Richard, for some time now, I know we've been talking about the shares of TransCore. We have so many things to talk about that. It has maintained that lead in terms of the trade, number of trade, and it was one of the reasons why the market was on the upside in the start of the week itself, as well as Oando. TransCore shares gained about 9.7%. Now, just last week, we had it being the preferred bidder for the AFAM Power. So now, what can you tell us about this TransCore share, and what's the scramble for this share on the NGX?
Okay, thank you so much for that question. As you know that one of the things that actually make a share price to move in a positive direction are good news around the entities. And what we've been seeing lately, I can term as good news around TransCorp PLC. And the latest one is the Abuja Disco that was acquired by them, and I think that's a positive one for them, and that's why we've been seeing the share price moving in a positive direction. And also in terms of, you mentioned Oando also. Oando yesterday closed up by 9.9%. As you know that Oando too, they are in the process of being delisted, and they are looking at paying their shareholder about 7.05 naira for the minority shareholders, and the stock has been trading below that price. And I think the reason for that gain is just because the share price is just moving towards that 7.05 naira that they are promising to pay their minority shareholders.
Okay, Richard, just in 60 seconds, we have, I saw the shares of NGX Group. It's released the Q1 results for 2023, which shows that the gross earnings, it fell by 20.5%, but pre-tax profits as well as after-tax profits were on the upside. So what can you tell us about this stock, the parent company of the NGX Limited? In just 60 seconds.
So speaking about the numbers of NGS, just from what you have mentioned, that their top line was down. I think that can be attributed to the fact that because they generate their revenue from trade, the volume of trade that we have in the market. So that shows that trade are not as buoyant as they used to be, but I think they've been able to manage their expenses. That's why their bottom line is on the increase.
Okay. So thank you so much for that analysis, Richard. And of course, our eyes are always on the market. So, Ladi, so that's it for the market.
Scramble for TransCore.
Scramble for TransCore. I think I'd also do myself a scramble for the shares of TransCore if it's available for the taking.
Right. Okay. I'd hope at a good price, hopefully.
At a good price.
All right. Thank you so much, Anita.
Pleasure.
Anita giving us details there from the NGX and the fixed income market. Let's take it to London now. Let's see what's happening in the UK. We have Juliana standing by right there. Great to have you, Juliana. Good morning. So we see UK unemployment data. That's out. It's up, this time as payroll numbers fall. How are you seeing this data?
Yeah, good morning, Laddie. We have had data this morning from the Office for National Statistics revealing that for the first time in quite a long time, the unemployment rate in the United Kingdom has picked up. It's now at 3.9% for the 3 months to March, and for the 3 months to February, it was at 3.8%. Now, internationally, that's quite low, but of course, because of the severe industrial action that has pretty much ripped apart the UK economy over the past 8 months, all eyes are focused on this data. In March, over 500,000 days of productivity were lost to industrial action, and there are fears that the labour market could significantly be affected in the months to come. Now, one of the reasons why it's picked up is because over that 3-month period, about 66,000 people have just fallen out of work. Even though we still have a high vacancies available, I think we've got about over 1.08 million vacancies. The issue is pay, and that's going to be a big headache for the Bank of England and its governor, Andrew Bailey. And one of the reasons why negotiations between the British government and union bosses have been so long and so stagnant is because the Chancellor Jeremy Hunt does believe that if they push up the wages of the public sector, then that is going to fuel inflation. Alongside the ONS data today, we did have a look at wages, and wages have risen to about 6.7%, but considering that inflation is at 10.1%, strong wages is not enough to help people with the cost of living. So pretty interesting data, but it does show that we are likely to see more of a pickup in the labour market as the months go on.
Yeah, quite a sensitive balance there, trying to balance inflation and wage rises at this point. But we see Vodafone, they've announced a massive program of job losses that will impact its UK operations. It looks like it's a bid to recover its financial performance.
Yeah, that's absolutely right. Vodafone, which is a large global telecommunications firm, they've actually appointed a new chief executive officer by the way of Margherita Della Valle. And alongside their trading update to investors this morning, she's announced a growth plan, which has caused some controversy because part of that growth means axing jobs, which we've seen significantly across loads of sectors since we've begun living with COVID over the next 3 years. In order to save €1 billion, she's going to be axing about 1/10 of the Vodafone global workforce, which is over 10,000 roles. I think the announcement is that 11,000 roles will go. Many of them will be in the UK, where I believe they employ about 10,000 people, and also in their largest market, Germany, and in Italy. Now, one of the reasons why she's doing this is because, of course, we know consumer habits are changing. People are pretty savvy now when it comes to how they browse the internet or how they use their mobile phone. And then, of course, I think it was me and you, Laddie, that were discussing that pretty embarrassing outage that Vodafone had across Britain last month when 11,000 people couldn't access the internet. So there have been a multitude of issues. She believes the way of combating that is cutting these jobs. Over the past decade, I think Vodafone have lost about 75% of their share price on the FTSE 100. So they're doing the best they can, but I don't think the announcement this morning was enough to cheer investors, because at the moment on the blue chip index, Vodafone's share price is down about 3.9%.
Definitely, investors be concerned about that. Thank you so much, Juliana. I'll catch you at 1:30. Thank you. All right, let's take a look at what's happening in other markets now. We see Bitcoin there struggling to get back to 30,000 at this point. We see it's 27,200 resistance zone, going to be broken. And we see the fear greed index there, 54 points down more into neutral zone. So showing that traders are not sure where the market is going. Is it bullish or bearish? We don't have confirmation at this time. That's why we have neutral. No one knows where to go. If we look at the top cryptocurrencies we track, Bitcoin there, down 1% this morning, but did have quite a nice jump from about the 26,000 level to 27,000. Ethereum holding that 1,800 levels, down 0.79% this morning. And we see BNB there. We talked about BNB yesterday with all the regulatory issues they're having moving out of Canada. We see the BNB token there, $312, down 0.66%. So it's mostly red we're seeing this morning. Cardano, 36 cents, down 1.87%. We see XRP at 8 a.m. this morning. That was also down 1.19%. Let's look at the other markets now for the top gainers. We see Lido Dow topping that counter, 7.54%, up $2.10. We see CFX also on the top gainers counter again from yesterday, so up 4.12%. So 29 cents, that's what it's trading at. See that rally. It's cooled off for now for that CFX token. Let's bring in my guest now, Eleman Dambel, joining me via Zoom. Hello, Eleman. Great to have you.
Oh, hey, Lottie. Thank you for having me once again.
Fantastic. So it looks like 30,000 is a big challenge for Bitcoin right now to cross over again. Why is that?
Yeah, no, absolutely. So I think there's quite a lot happening at the moment, as we saw last week. Of course, inflation in the United States is somewhat cooling off, but now the question is what's going to happen as far as consumer spending. So later on today, we have retail sales data, which for the first time in the last 3 months is expected to rise. So depending on that data, and of course, what's currently happening with the US debt ceiling, and a potential increase to the limit over the next few weeks is also another point of contention for markets. But I think looking at today, the retail sales data will definitely play a part in a potential breakout of current key resistance levels for Bitcoin.
And definitely, according to the great investor Warren Buffett, it did talk about Mr. Market, having mood swings, up and down, up today, down tomorrow. But we have, long-term investors, looking for some strategic points, to enter this market. What are the indicators telling you about, long-term price action for Bitcoin?
Yeah, it's quite funny. I wrote an article yesterday about if Bitcoin could potentially reach that 30K level this month, and talking about key levels for it to overcome. We're currently in the middle of one, so it's just trading below 27,300, which historically has played a huge amount of or act as a huge point of resistance. And I believe if we are able to not only break out of that level, but truly sustain a breakout later on today, history will show you the last time it traded at that level, there was a lot of upside. So depending on what happens today, paying attention to the relative strength index as well as trading below a ceiling of 42. So if those two ceilings or points of resistance can be broken, I wouldn't be surprised if we see a strong rally throughout the rest of the month.
And looking at the monthly charts at this time, what are those key indicators saying? Are they signaling bullish sentiment?
Yeah, again, ultimately, what we have in terms of price strength, relatively speaking, is somewhat lower than what we have seen in the last few months. So it is still, relatively speaking, closer to being oversold than overbought. So a lot of bulls looking at it from a longer term perspective are looking at that indicator as a potential opportunity to climb to the upside. So once we start seeing price strength gradually increase and move past these key levels, such as the 42 point and 45 and 50 respectively, after that, that's when we're going to start seeing previous bulls re-enter the market and hope to push the price back up above 30K.
All right, I guess we'll keep tracking those prices. Thank you so much, Element Dambo.
My pleasure.
Thank you. All right, let's look at the top losers today. This morning, XDC is down by 4.56%, same as Huobi token. That's the native token for the Huobi cryptocurrency exchange. That's down 4.56%. Sweet token there, $1.17. That's down 3.98%. Kava, that they tried to break that $1 level a few weeks back, but it's lost that level now, 98 cents, down 3.19%. So we say the market is still looking for direction at this point. Sentiment still pointing to neutral, but according to my guess, it's still quite bullish for Bitcoin at this time. So that's how the markets are looking. And that's it on the program today. Thank you so much for watching. Don't forget to join us 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch this again on our YouTube channel. Let's flip over to YouTube, click on videos. You can watch all our production. Thank you for watching. I'm Ladi Williams. Bye for now.